Good morning, everybody. This is Michael coming to you from GammaEdge on Friday, July 28th. We're going to start our pre-market morning strategy session here. We're looking at a little bit of a gap up in the SPY, ES, SPX, Qs, and IWM. We'll go ahead and start going through our morning PBI charts and commentary here. Here's the SPX PM settled. All expiries turned on as notated by the black tiles here. Very tight transition now that we've seen 45.65 to 45.70. We continue to reference that 4600 overhead as an important level for us to get above. Yesterday we came right up to it, had some stalling, and then saw some dealer adjustment sell off pretty quickly into that level. We've seen a little bit of degradation of the calls to the upside. We now have some in the money puts. Hold on one second here. There we go. Okay. So we've had some degradation in the call side. We now have some in the money puts here. This is going to be causing some pressure, a little bit of pressure possibly to the downside. If we get above transition and start moving up, then we have supportive flows below us. We still have a call dominated, in the money call dominated below us, but it seems a little bit of erosion here, as you can see with these red net deltas showing up. So we want to see this change pretty quickly back to a call dominated above and below spot price as it was yesterday. So we'll see how that plays out today. Again, a negative gamma condition on all expiries, 1.71% expected move there. And we see a 4,500 to the downside, pretty important level there. We've been discussing that for the past couple weeks. Decent amount of demand into that area. In the money calls sitting there, 100,000 contracts, 4 billion net delta there. Zero DTE, again, very tight transition. This matches the SPX PM settled, which is an important confluence there. Again, 4,600 to the upside. We've noted that any move up into that level, we would look for some stalling, not really moving above that level very much, at least today. 45.50 to the downside has grown pretty significantly on the zero DTE. We see where spot price was at the close yesterday. So getting above 45.50 is extremely important, and then above transition if we want to have any possibility to start a move up to the 4,600 level. Again, above and below spot price, we see in the money and out of the money put dominated on zero DTEs. These will be expiring today. Could give us some positive charm flows back to the upside. We'll see if those fill in. Encourage everybody to do the $vol-D command and vol-U command in the Discord, and watch for our targeting levels. Yesterday was pretty interesting how we saw the targeting levels come in to the downside pretty quickly once we reached 4,600, and then started having a failure of 45.80, which we noted in our morning strategy session, and then also posted to our morning notes. So they're zero DT level. Plus one DT, this is Monday as expiry. This also includes the JPM hedge and the end of the month. You'll note a fat and wide transition here. This is kind of a back and forth action. Nobody really has any positioning at the moment. We're just kind of all over the place. We like to see a narrow transition for if this then this. But anyway, the bottom of the transition here for Monday would be 45.10, which would match that 4,500 level to the downside, which would be pretty important if we get there. Again, 45.75 on the upside. You'll notice the confluence between the PM settled and the plus one DT is really at the top of that transition. We call this P-trans at the top. All the strikes above that can change to positive, and we want to see that if price get above that, if we want to have any chance to move up to that 4,600. Again, into the end of the month and Monday, I would look for stalling into that 4,600. Really not much move above that 4,610 unless we see this structure change very quickly in sentiment, and we'd want to look for targeting above this P-trans level and above 4,600. All expiries turned on. This is a combo complex. This includes the AM and PM settled. Again, we've seen some erosion of these calls to the upside. We now see in the money puts that 4,600 again dominant level. You notice we've mentioned that multiple times there, and then 4,500 to the downside. So for thesis for me is I'm looking at 4,500 as the downside goalpost, 4,600 as the upside goalpost, and then this transition level will be extremely important positioning if if you want to play intraday or the next few days. Above, we have kind of a bullish thesis lean, move up to 4,600, and below transition would still see some weakness down into that 4,500 level, and then looking for demand in the market into that 4,500 level. Below 4,500 would be an overall market structural sentiment change, and then I'd be looking for a little bit more weakness down into these net positive deltas down into the 44.75 level there. Still seeing targeting above us, calls, out of the money call speculation continues above us, 46.50, 4,700, and we'll note that on the landscape view here. So still speculation that really hasn't gone away. If this completely goes away, then we'll look to a little bit more bearish thesis in the market. JPM hedge up here at 46.65 noted here. Landscape view plus GEX 4600. We have noted that we had started about a week ago with the minus GEX at 4,000. It had moved up to 4,300 and now it's up to 4,500. This is a supportive type development, and we want this liquidity to fill in here. We had noticed that there was an absence of liquidity below us at 44.75, that would bring in a possibility of dropping below 44.75, but now we've seen some liquidity fill in, which is good and a positive development. So again, any movement down to 4,500, I'd be looking for some supportive type action, and then we still see 4,700 up top side, and then 5,000 here, pretty much staying stagnant. So call speculators are not throwing in the towel here, and they're still targeting this directionality move into August and into the next quarter so far. So we'll go ahead and look at the our market model from the tick point of view. This is tick ARCX. We did notice our shortest term market timing model turn off yesterday pretty quickly, noted by the bolded white line moving under the moving averages into the downside. So now we have a downside slope in the CT. So we'll watch to see how this develops today. We had currently been in an uptrend. Long-term market model, we have the red above cyan and the slope is up. So for a long-term timing market model, we're still positive on that. But we'll watch the short-term market timing model for any consolidation and development. You want to see this begin to flatten out and then start to curl back up and turn back above the moving averages. We have all the tag combos listed with the back testing there in the Discord channel, so make sure you check those out and understand where we're at in the overall market structure and your probabilities of being long or short the market with these short-term CT timing market model. Tick US here, pretty quickly yesterday, we saw the tick cumulative drop below zero, and then we saw some accelerated selling into the afternoon starting about 1 o'clock. Pretty evident here. Again, tick cumulative here. Filter tick, this is plus or minus 1,000 on the tick. Again, some institutional selling into the afternoon pretty quickly. We saw those dealer adjustments come in as we had reached that 4,600 level, and then started to see some stalling and dealer adjustments for the dealers being actually too long in their overall environment and overall portfolio. So we started seeing some selling. Again, multiple faceted, could have been calls closing mechanical or puts opening, which would cause the dealers to sell on both sides. Again, new highs did barely outpace new lows. We see this differential here, so that's still constructive on that. Again, we're into this into this colored ribbon. So we have the tag combo back testing for that. Understand what that looks like, and then look for this to consolidate and then start to move back to the upside for getting along the overall market. We have the new web app that is out. Everybody make sure you check that out, understand how to use it. You can click all expiries on and off, drag all expiries, look where we're at within the overall market environment with 0 DTE, and then all expiries. Transitions are labeled pretty quickly, and then we see the gamma conditions here. You can also look at the expected move, net gamma, call OI, and our other dashboard indicators here. So I encourage everybody to look at that. So that's all I have for this morning. Thank you everybody for joining. We'll see you in Discord in just a few minutes. If you're joining us on YouTube, like and subscribe. Thank you for joining. Make sure then you'll be notified when we go live, notified of educational content that is posted. If you follow us on Twitter, also like and subscribe there. and you'll be notified when we post our morning notes and our YouTube videos. We usually post those after lunchtime, after the members have had time to review, and we went through our morning strategy session to answer everybody's questions. So go ahead and like and subscribe. You can come in and join us at GammaEdge.us. 14-day free trial, all the tools turned on, and we have a great group of traders. We hope to provide education to everyone to make Gamma actionable in your trading plan. We've started a new portfolio also that we've tracking with live trades with our Gamma triggers for our trades or our trading view overlays. So make sure you come in and check that out also, and we'll show you how to use that and execute that. So thank you everybody for joining. We'll leave the YouTube live up. We'll be going to our morning chat session here. So anybody joining us on YouTube will be able to listen in live as we discuss the morning into the open here. We have about 15 more minutes. Thanks. All right, you guys are still live on YouTube, so if anybody has any questions, comments, thoughts.
I would say is it looks like we're going to gap up right into the transition, and Paul was saying that, well, we got to get above it if we're going to move up, or down if we're going to go down. So I don't know, we're going right to the fulcrum.
Yeah, I agree. Getting above that P-trans, obviously this morning, all expiries here, but yeah, getting above P-trans is going to be pretty important. Pretty quick development though on the overall structure. Not super, not to where I'm being super bearish, but that erosion of the calls above and below spot price was pretty quick. So now we have in the money and out of the money puts, above and below transition, and then above and below spot price. So that'll be pretty important. Zero DT though, obviously these are going to be expiring. So if we're above transition, we definitely could see a push up to 4,600 as we get some positive charm flows. And as these puts become out of the money, possibly mechanical closing also, so that's going to be pretty important. 45.50 to stay above, I think, is really like the line in the sand for me. Below that, I would lean a little bit more weak and bearish, with P-trans and 45.50 kind of sitting there. So
45.65 to 70, that's been an area that we've had that negative gamma there for a while, and if we can get over that, that at least sets up an initial run for the border. Not saying that we get there or that it, or that we stay there. Also, pre-market, I know, is targeting of like a lot of upside calls. So my guess is that'll cause an initial, add to the initial pop, on the open. Again, how long that lasts is another story.
yeah.
By the way, if you're listening on YouTube, this open mic that you're hearing us do, this goes on all day long, and like I said, there's a great group of traders here, and it's helped me out a lot.
Awesome, thanks, Doc. Yeah, the SPY, we've seen the seen erosion of calls above and below also. So that was yeah, and puts come in a little bit there. So 450 to the downside is pretty important on SPY. All expiries turned on there. So
I love when we see these puts get closed though. As they expire, as they get closed, we get a lot of upward pressure.
Yep, I agree. Yeah. Yesterday, I mean, I haven't had time to talk to Paul, but we see these days like this where we had laid out the let me go ahead and pull up the morning session from yesterday. Yeah, this is our morning summary from yesterday. Make sure everybody understands that 727, and we laid out that 45.80, and then if we were below 45.60, kind of where we're at. Obviously, we knew 4,600 was pretty important, but it's pretty amazing once we get up to those levels, and then once we start seeing the calls closing, and then it's like a lot of the zero TD puts jump on also, and then I don't like to use that snowball, but then it just starts snowballing. Obviously dealers are too long here, but people start closing, and then it just really quickly accelerates, to the downside. So, I'm not throwing a thesis out there or conspiracy theory, but I think a lot of this has to do with people jumping on the zero DT also, and it just starts once it starts that ball rolling downhill, then a lot of people are just stacking on the puts, which we see with the vol D command pretty quickly, and then it just causes this exacerbated move, where dealers have to make adjustment pretty rapidly. So
some of those premiums were so jacked toward the end of the day, like $250 for, 10, 20, dollars out of the money with an hour left in the end of the day. So people were just, buying them blindly almost.
yeah, yeah, it just the price action is just so interesting though, because these are large. I mean, I could expand it here, but these are large dealer adjustment moves. These are not just retail traders or people just selling. I mean, these the dealers offsides and has to make quick adjustments. And when we start seeing those comparative to like a grind up day, this is when I really start taking note. When I see these large expansion bars, I just that should be for most people, if you're new here, that is saying that there's a major adjustment going on very rapidly in the overall market. So you should take note of that. And then if you were long or trying to get long in the market, you should step back and say, okay, where am I at, and what is this telling me? And then is this going to continue, to the downside? So.
Well, for my P-trans to PGEX trades, I stayed in the ones that I'm in, following the plus GEX signals. So, and it looks like it's going to pay off this time anyway, or at least not be as bad as it looked yesterday.
Yeah, I had some questions about that overnight. Actually, some people were saying, the tick turned bearish. Should I go ahead and get out of these P-trans trades? And that's not, if everybody's listening, that's not the way the portfolio was back tested. It wasn't back tested with tick. It was just back tested with the P-trans to PGEX. If PGEX drops and then price goes above PGEX, then obviously we exit the trade. But I think this helps a lot of people that are not button the seat. Like if you did not look all day yesterday and came in last night and you looked at your charts and you'd be like, oh, those are some larger engulfing candles, right? But you weren't watching the intraday volatility, right? Like some other people were, and everybody was like, oh my gosh, this is a huge move intraday, but we only ended up, the SPX was only down, 0.67 or 0.7%. So,
yeah, it was mild.
Yeah, right? So in the overall scheme of things, so if you're a longer term, like we're doing with the P-trans to PGEX, none of that intraday stuff mattered to you yesterday, right? So you came in last night, you ran your stuff, you looked at your levels, and you're like, oh yeah, price came back down. And a lot of them came back down to 0GEX and P-trans, right? I mean, we were stretched above 0GEX and P-trans significantly. I mean, we were significantly stretched above that. So really, this has just been a correction back down to 0GEX, which obviously is a balance of calls and puts, and actually P-trans on a lot of these. So nothing's really changed much in the overall of individual stocks. So.
Yeah. And the long-term cumulative tick is very bullish still.
Yeah, totally agree.
I got a flip on one day of, Bank of Japan news or whatever.
Yeah.
These portfolios have been Monte Carlo simulated. So that supposedly takes you through times we're going to have drawdown. So you can actually look at those Monte Carlo simulations in the channel. I guess that's on back testing.
Yeah, I agree. So GammaEdge summary for today. Paul posted the morning call PDF for us. I'll go ahead and just show it here. Obviously commentary if anybody wants to look at this. Overall overnight parking potential here. So important bearish bias. We just discussed the 45.50 before even looking at our GammaEdge summary. So pretty important there. The longer we stay below that, more charm is pressing us down. So we saw that with those in the money and out of the money puts there. Again, 45.50, significant negative charm flows for decaying out of the money calls, and we will gain those in the money puts, which is important. So we really talked about that 45.50. So we kind of already pulled that out and saw that was going to be important. Again, above 45.50, like we said, the bullish bias, the charm will work for directionally. So, and then the P-trans. So we did a pretty good analysis there. negative gex 4,500 is growing. I think that's important. That's an important development there for downside movement and possibly putting a floor under us. Again, I don't want to use support and resistance, but this is an important development of those puts coming up under us and taking advantage of a short-term pullback and move. And weaker out of the money call delta, we noted that. Some erosion of that out of the money call calls above us. So we want to see that change back to all green and dominated pretty quickly. So market model TC6. So one slope of the ribbon is positive, transition to an inferior long state. So make sure we know what those are. Reference those. Again, if you're looking to go long, the overall market, the long term is still on, red above cyan, but your short term timing, you at least want to see this start to consolidate and flatten out if you're even thinking about going long. That would be a sideways consolidation, and then it's an if this then this, could break either way, but you want to see those moving averages drop down and the bolded white line at least start to cross back up and the slope change there. So yeah, I had a question there. How immediate are market maker responses to open and close the contracts? Delta changes, larger changes requiring more urgency, while smaller changes not being as immediate. Maybe save transaction costs or readjust hedges. Yeah, so there's two things here. Obviously, the mechanical opening and closing of contracts dwarfs all the first and second order Greeks. We want to make sure everybody understands that very quickly. We talk about gamma, we talk about charm, we can talk about Vanna, but the mechanical closing and opening and closing of contracts blows that first and second order Greeks out of the water. And when we start seeing this here, this is not charm flows here. Charm flows are more of a grinding type action, unless you're getting really close to expiring where you're at in the money, out of the money, or in the money, at the money, high sensitivity. This for me, Paul's not on here, but this for me is mechanical closing of contracts. The dealer is too long. Puts or calls are being closed. Our book is closing, getting shorter. Dealers are getting longer, and they have to adjust just rapidly. And there's a significant amount of transaction happening very quickly. That's why I said these are take notice bars for me. If I'm long the market and I see these dealer adjustment bars very rapidly, you can see over here, I mean, this is a 10-minute on the Qs. I mean, those just boom, 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 boom. We call these stacking bars. So once those start, it's kind of like a domino effect, right? I use the analogy, until one person gets on the dance floor, nobody really wants to get on the dance floor, but once one person gets on the dance floor, everybody starts to go. And that's kind of what you're seeing here. It's just that rapid closing of contracts, or both. It could be the opening and puts also. Closing calls, opening and puts, same mechanical effect on the dealer book. So both just happen very rapidly. So hopefully that answers your question. And that's why we have this morning summary. We can do the if this then this, right? We have that. We understand that. We know the levels, but people always come back and ask after we have a large movement day like this. Well, what happened to the levels, right? Well, there's multiple things that happen, and as I said, is the mechanical opening and closing dwarfs the Greeks, right? But we noticed we had referenced 4580. If we get below 4580, there's probably going to be some more market weakness. We got below that, we stalled just for a little bit, and then we saw that more market weakness, and then we were talking about 4565. Below that, we had pretty much a bearish weakness bias, and you see that really start stacking on again and just rapidly into the close. So we had two levels where you could have adjusted for the day, and again, these are if this then this, right? You get below this and start seeing some more weakness. You step back and say, okay, I'm long the market. CT is turning against me. I'm seeing these dealer adjustments. Maybe I should, adjust my thesis or adjust my, portfolio long deltas. And then 4560, 65, we were talking about, if we get below that, then we're going to capture a lot of those puts, and it's going to see more market weakness. So that's pretty much what happened yesterday. So
all there at 70, 75 though was sit on your hands, which I'm not good at.
Yeah, and that's why I always pull out time frames. A lot of people want to use the 1 minute, 5 minute, but I pull out time frames. I mean, we had 2 stalling bars here. Now, could have this went back the other way? Absolutely, but this is for me, if this, then this, right? If this, we start going back above 45.80, okay, maybe a little bit more bullish thesis. We start leaning a little more to the upside, but we break the low here on I call this a dealer adjustment bar, but a take notice bar. I mean, that was a pretty significant bar. It wasn't just a little grinding inside bar. That was pretty significant and took out the lows. So I can review BABA, Gary. Yeah, you want to review it on the app? Or on the chart, either one. I can look at both. Hey Paul, let me know how the audio is. Hey Paul, let me know how audio is on the YouTube. I just turned it up a little bit. It should be much better now. I just didn't. Okay, I just didn't want to blow people out of the water there. So. Yeah. So here's BABA. All right, so we're having an opening there. Yeah. So here's BABA. Again, that 100 level is pretty important. Transition's extremely narrow here. We still have that expected move, so nothing's really changed. We'll see how this kind of goes into today. I'll look at let me look at the Discord charts. We'll see what we look at there.
I think BABA is one of the underlines that Paul noted when puts left-hand plane, right-hand plane on the net delta charts.
Yeah. Yeah, I think so. I haven't didn't look at that. Yeah, it's still so today's run. Let's see. Let's go ahead and look at these. Yeah, so still completely call dominated on the wing structure, which is great. 100 is pretty important there. Daily view here, obviously, 95 is going to be pretty important on a pullback. COTMP here, 0 gex here, again hundreds here, plus gex. We'll see. I mean, that's still the target to the upside, which would be a move above plus gex and would be our exit for the P-Trans to plus gex portfolio. So we'll see if that changes at all. But any pullback down into here, I think, would be supportive. COTMP 0 gex, P-Trans is 97. So obviously we want to get above that for a move back up to 100. But still, the wing chart's completely call dominated even into the next expiry. So that's next expiry here after 8-4. So really it doesn't change from the put side. And the calls drops a little bit, but not much. So still a total call dominated environment through the next expiry, which is good.
Yeah, it went green to yellow on the net delta.
I did see that. Yeah, I saw him post. Yeah, I saw he posted that last night. So. Yeah, so gapping up right there to that 45.70. This 45.70 to 45.80 will be important on the open here for SPX. Those P-Trans transitions on the 0 DTE will be important.
Energy is the only red sector.
That's good. Okay. Yeah, so...
except for CVX, our CVX position.
So
nah, it's fine.
Yeah, so 0 DT here, we're gapping right into the top of this transition here. Obviously, we want to stay above this transition. We would like to get above 45.80 for having any move up to 4,600. So if this, then this, and then 45.50 the downside on the 0 DTE. So we'll check the vol D command after 9:45, kind of see where the targeting is setting up. But staying above this 45.60, 45.70, will be pretty important if we want to see a move up to 4,600 here for today.
Yeah, XLE is really kind of garbage ETF. XOP, which is upstream producers, that's doing well today. And what's dragging is probably, I'm going to say refiners. I haven't really looked at it. And green energy is really sagging today.
So, anyone who's watching my weekly diagonals, one of my positions today is that's expiring today is 45.70, 45.75, which we're right near the peak of right now, and I'm managing that. Basically, I put alerts at 45.80 and 45.60, and so as long as we stay between those 2 points, I'm going to keep holding the 45.70, 45.75 position and collect data on it. But if we move out of that range, I'm going to close it and take my profit. So that's the thing I'm watching right now, and I've got higher positions up near 4,600 that are theta positive that I'm probably just going to keep holding until or unless we get much closer to 4,600. But my strongest performing position right now is the 45.70, 45.75. So that's like leading my brain power at the moment. Looks like we might be losing transition though, although it's still super early. Hey Michael, you watch AMD quite a bit, right?
I do.
Do you think that, I mean, it's got a strong open, it's up above the 21-day here. Do you think, and it's had a rough few days. What do you think its prospects are? I guess is my question. P-Trans up at 115. It held VWAP there. It's holding the 21-day, which I show is 113.3.
Yeah, so for me, we're still call dominated, just not significantly by the wing charts. Let me pull up this chart here. Whoops. So I've been looking at this. Obviously, level overhead. We hit plus Gex yesterday, 115, and pulled right back, right? So holding above, this 110 is extremely important from a TA level, from a zero Gex, gamma level, you know what I'm saying? So if I was playing this trade, I would be playing it versus that 110 P-Trans plus Gex here. Obviously, confluence of moving averages here, right? 50-day, 21-day. So if you're a TA person, excluding gamma is pretty important. You can see a TA level right here, kind of right above that 115 level. But the targeting is 120 and 130, and we're a call-dominated environment. So I'm leaning that way for a move up, at least above plus Gex and back to COI 120. So I think that's a pretty good probability.
Yeah. No, I think so too. I've got a position that expires today though. And
yeah.
So
only concern is earnings is the first on next Tuesday.
Right.
So
I was hoping to get a nice price run up in advance of earnings, but that has not happened. So,
yeah.
Not happened yet anyway.
Yeah, and even after the next expire, it's still call dominated, which would be post EPS. So I haven't seen a significant change on that. So, but I don't know.
Yeah, no, who knows?
Earnings is Tuesday, so that's the only kind of fly in the ointment caveat. So. Yeah, so it looks like SPX obviously open, went right up to that 45.70 ish area, and then pulling back. So we'll see how we act as we kind of consolidate and chop around that transition level there. So. If we get above 45.80, I would lean more towards us moving right back up to 4600. So that would be my if this then this thesis. So.
Good morning, everyone.
Good morning. Sorry. Yep, Paul, I did that on the start too. I left my YouTube volume on, so.
How are we doing?
Good. I think we have a good handle on if this then this today. That quick erosion of the call structure above and below spot price was, I don't think it was unexpected. Maybe just a little bit quicker than what I would have anticipated. But yeah, we'll see if the bulls step up here and get us back in a good structure look there. Above 45.80, I think we definitely have a nice quick path up to 4600, but we got to get above that transition and above 45.65 to 45.75, but that 45.80 is pretty important too. So. On a theoretical or kind of thought process standpoint, if anybody shorted towards the end of the day yesterday, they are obviously not happy with this gap up. So that would be a kind of structural trader type thought process. So.
Hey, Len, are you on?
Yep.
Google 132 calendars.
You hit it on the nose. Well done.
Well, I mean, it's plus dex, it's plus a couple points, so I have no genius on my part.
IWM recovering pretty quickly is nice also. So.
Tick tick opened super strong, then it weakened a bit, and now it's like picked back up again. So I think we're past the initial like book balancing buying, and people are actually deciding they want to buy.
Yeah, XBI is up there. That's nice. Obviously, that's biotech. Qs sectors XLC, XBI, and Qs and IWM are leading at the moment. So only 15 minutes in, but that is a little bit more risk on. So we'll see.
XBI is biotech, right? That's what you said?
Yeah, small cap biotech. So those are the speculative biotechs. So.
Home builders are still on a run.
Good, Paul. Good commentary on that charm flow. What was interesting, I think Lynn posted, but the deltas change you had posted last night on a lot of those stocks. So we'll see if those repair themselves or if that's, you know, a overall sentiment change on some of those. So.
Yeah, we pulled back pretty hard on the cumulative tick. So in the ARCX, we're going to have a lot of, in the continuous tick, where it stitches together the ending point of yesterday and doesn't reset it into the new day. We've got a lot of ground to make up before we can claim victory here. But we're above the close almost immediately out of the block, so at a bare minimum, not suggesting anybody front run anything. We're in a weakened position. We're in the ribbon, we're below the railroad track. I mean, just don't get out over your ski tips. But today will portend towards bullishness and buying the drop yesterday. Watch the levels, I think, is the real key thing, and that 45.50 level is absolutely critical here today, because that's a put dominated level, not a call dominated level. So if we're above it, it's going to be supportive, and that's going to be a pretty important thing, right? So we gapped up to whatever we did, 70, like you said, we're flirting around. I would not at all be surprised if we test to 50. If we test 50, maybe sweep down through 45, don't spend a lot of time in there. If we recover 50 and break up on a solid bar, I'd go long in that roll. I will say right now, it appears tick is weakening, but let's just let the morning go forward here.
Hey Paul, I don't think you were on earlier, but since you sometimes show interest in how I manage these diagonals into expiration, the one I'm watching most closely now is a 45.70, 45.75 diagonal that I'm going to hold unless we break above 45.80 or below 45.60.
I think charm flows are going to be pushing you above that today, if I had to call it.
Yeah, I agree. That's what I'm thinking too. So I'm watching 45.80 on the top side to close that.
Yep.
And then I've got more positions up near 4,600, but I can only really think about one at a time. So I'm watching the one that's making the most money at the moment.
No, it's fair, and I appreciate you sharing that. I mean, I think